Hello, everyone. Welcome to Stockertim. Welcome to Stockertim Special, presented by Stockertim.com. On today's episode, we will be looking shortly at Robinhood Markets Inc., one of the major stocks in our portfolio at Stockertim. Robinhood has finally hit about $137 per share. This is on the heels of Robinhood being added to the S&P 500. But apart from being added to the S&P 500 index, which is a very, very big achievement for Robinhood and all Robinhood shareholders and investors, what exactly is going on? Why is this stock continue to climb? Is this from the euphoria of S&P 500 inclusion? What exactly is the future for Robinhood and Robinhood investors, and what exactly do we think? Being one of the shareholders of Robinhood. Before we go ahead, every information shared on this channel is for information and education purpose only. Do your due diligence or consult your financial advisor before making any decision. On that note, thank you so much for watching this episode. Like this video, give this video a like, subscribe to our channel, put on the notification bell so that you don't miss any update. And like I said earlier, this show is brought to you by Stockertim.com, the website where you get all the information, data, guidance that you need as a retail investor. I'll get into that after we are done with this show. So let's get into it. So, to the surprise of many investors yesterday, many Robinhood shareholders, investors on Wall Street, Robinhood climbed a whooping 12% on a given day. And this is coming a few days or a few trading days after Robinhood was added to the S&P 500. And for many retail investors or beginner investors who don't necessarily understand what S&P 500 means, S&P 500 basically is like a basket of all the top 500 companies quoted in the US stock market, and also who have the headquarters in the US. So basically the best of the best companies in terms of earnings, in terms of revenue, in terms of their market cap, which is the total value of their shares outstanding, and also based on other metrics in terms of who exactly own their shares between retail and institutional investors, and a few other metrics that are not necessarily disclosed. So basically, if you have exposure to any company quoted on the listed amongst the S&P 500 index companies or stocks, you are investing in a very, very strong company that has actually proved itself worthy of being added to that to the index, and by extension a lot of institutional investors, a lot of retail investors, a lot of pension funds, a lot of fund managers who basically have huge amount of money to actually manage on behalf of their clients and customers. They basically mirror the S&P 500. They basically buy companies or buy the entire index or make a large chunk of their portfolio of the investments that they hold or manage for their clients or customers. They basically mirror the S&P 500. We also have the Nasdaq 100, which is a discussion for another day. But given what we now have, Robinhood Markets alongside AppLovin, another ad tech company, were added to the S&P 500, a big achievement for Robinhood. And since then, the stock has really been on a tear. Actually, the stock pulled back a few days. I think last Friday when we had the last trading session for the week. But now it seems a whole lot of indicators are now working in favor of Robinhood. Now, does this mean this stock will continue to go up forever? I don't actually think so. I'm going to look at the trajectory of Robinhood, how Robinhood actually got to where it is, and what we think at Stockertim, because Robinhood perhaps is the third or fourth largest stocks in our portfolio, in our overall portfolio. So I'll get into that now. But before I go further, like I said, this episode is brought to you by Stockertim.com, the website where retail investors get to learn, get to actually understand how to pick stocks, how to actually understand why companies do well, why companies don't, a whole lot of other ideas that you can invest in. So I'll be showing you just a few details about what Robinhood has been doing as a company, how it actually got to where it is today. So in the last 1 year, or year to date, rather, let's start with that. Robinhood has now delivered about 266% year to date return, which is just from January till date, from January till today. If you see this performance, Robinhood is now on record as the best performing company on the S&P 500. Yes, it's a new entrant into the index, but in terms of overall year-to-date performance, Robinhood is now number one in the league of NRG, in the league of Palantir, and a few other companies. But as we speak, Robinhood is the best stock on the S&P 500 as we speak today, barring any other pullback. But if you look at the last 1 year, which is more instructive, you will see that the stock has basically almost doubled what it has done year to date. You can see it's over 483% return. If you look at the last 5 years, that is even more instructive. You could see the stock actually recovered, was on a recovery path, and it fully recovered, as at this year. And if you look at the overall, it's still the same thing, overall picture. So this is a company that has gone through a lot of rocky episodes. So let's take, for instance, during the COVID pandemic, you could see a huge surge in the price of the stock, in the valuation of the stock. As soon as the pandemic, started rolling over, and we had the reopening and all that, we had a very, very big problem, which was the Russian invasion of Ukraine. You could see that the stock struggled all through the whole of 2022. You could see, in fact, the stock was trading below its book value, below the value, the enterprise value. You could see, $7, $10, $9 per share. But as of 2024, you could actually see, as soon as the inflation problem and Bitcoin price started coming back up, you could see Robinhood saw a massive ramp up on the stock. It pulled back early 2025 during the President Trump tariff war and all the rancorous kickoff that actually happened. But as you can see now, in the last 1 year, it seems the stock has fully recovered and is now a more stable stock. And what even makes it, more or less the cherry on the top, is that now that Robinhood is now on S&P 500, the stock will now have a larger base of investors, a larger base of people buying and selling the stock. And in the first 6 months to 1 year of a stock, historically speaking, of a stock being added to the S&P 500, most of the stocks actually do better than they've actually done in the previous year. Some stocks actually underperform after they've been added to S&P 500 because it's not a ticket to El Dorado. If the company is being added to S&P 500, a company can get added to S&P 500 and they have maybe a PR crisis, or they have a major problem, or their revenue just collapsed or something happened, and that stock will actually underperform. But if you actually see what is going on with Robinhood now, if you go to the metrics, the company now has over 300 billion asset under management. Robinhood is now rolling out Robinhood Banking, which is like a private banking kind of service for retail investors or people who don't necessarily qualify for private banking, with the likes of JP Morgan, Morgan Stanley, Goldman Sachs, and all of the big banks that you can think of. Robinhood is also doing very well with prediction markets. Prediction markets, more or less, which is like a sports gaming kind of product. Robinhood is doing very well with crypto. They've acquired Bitstamp in Europe. They've acquired WonderFi in Canada. They acquired Trade PMR. So a whole lot of things is actually working for Robinhood positively. So at the end of the day, is this just going to be a honky dory kind of ride for Robinhood? I don't necessarily think so, because part of what I showed you, when we go back to the 5 year chart, you could actually see that at a point, Robinhood was trading far below its enterprise value, its book value, and the stock really, really suffered. So we might have another, major geopolitical issue. We might have Bitcoin, pulling back maybe to about 80, 90,000, or even 60, 70,000. We might have inflation becoming much more problematic. Yeah. So the Federal Reserve is looking at how to actually balance everything to make sure they don't run the economy too fast, and the money in circulation becomes too much, and inflation becomes very, very problematic. So the Federal Reserve, if they continue to cut rates, Robinhood will get much more value, because much more risk-taking appetite will increase. A lot of investor sentiment will actually be more positive into investing more, and even spending more. So the likes of Robinhood actually benefit when the economy is running very, very fast. But when the economy slows down and inflation becomes much more problematic, the likes of Robinhood actually have challenges getting more people to invest, getting more assets to come to the platform. So that's basically what I think about Robinhood. Should you be investing in Robinhood now, when the stock, if you look at the market cap, is around $121 billion. But at the end of the day, you want to actually do your due diligence. You want to actually do the right thing by making sure you are investing in something, in a company, in a stock that you actually understand beyond the stock price, beyond the stock charts. And that's why we created Stockertim.com. I'll take you to Stockertim.com now, so that you have an idea of what exactly this website is about. So this is Stockertim.com for everyone who actually is actually asking how exactly does it work. We have several content on the website, from news. We have the daily brief, which is more or less a premium content that Stockertim member community members actually have access to. Basically, the daily brief gives you all the information you actually need to know, especially about companies that are doing well, companies that are not performing well, companies especially in our portfolio who are performing, underperforming, why are they performing. Anytime we also had a new stock to the Stockertim portfolio, we also announced that. We give a very, very detailed analysis of the due diligence that we've done. Also, all the videos that you watch on Stockertim channel, YouTube channel, we also have the premium videos. We have we have every other videos as well, that can actually add much more insight, much more depth to your researching, to your to your investing journey. So at Stockertim.com, really what we basically want to do is to make sure retail investors like you and I, we have all the necessary information, all the necessary data. It's still a site that we are improving on. Much more features are coming. We are bringing much more features, such as chatting. We are bringing much more alerts. Whenever we sell or buy any stock on in our portfolio at Stockertim, you get alerts on the platform, and we also tell you why we are doing what we are doing. So it's never any financial advice offered. There's no financial advice. There's no it's not a licensed financial advice. So you still have to do your due diligence. But if you want to become a member, joining Stockertim Premium, which is basically the membership that gives you access to much more premium content. It's just about $10 per quarter. And we also have the private, which gives you much more depth, one-on-one coaching, video meetings, a whole lot of bespoke or customized portfolio design. So that's exactly what we have. And going back to Robinhood, what exactly do you think about Robinhood? Do you think this stock still has much more room to run? Is this stock going to, for instance, maybe the valuation of the stock will actually be going to about 200, 220, 250 billion? When do you actually think this will happen? Are you looking to invest in Robinhood, or do you already own Robinhood? What exactly are you doing, and how long do you want to actually hold this stock? It's left to you, but our Stocker team, we have our own strategy, and that's what we share at stockertim.com. Thank you so much, and thank you to the stockertim.com community and team for bringing this to life. Thank you. On the next video, I will see you. Keep investing, keep going. Take care, and bye bye.